Welcome back. It's Commodities time here on Business Morning on Channels Television. And joining me for the segment is Dumebi Oluwole, Senior Analyst of Financial Derivatives Company, joins us virtually from the island. Hi, Dumebi. Good morning. What did you do to the Naira yesterday, Dumebi?
It wasn't me. Supply demand dynamics.
That was harsh. More than 900.
Exactly, yeah. So we did see a drastic decline in forex supply to the official window, and this significantly pushed demand to the parallel market. Already we were seeing the parallel market rate trade at around 885 Naira to a dollar, 895 to a few days before yesterday, and then just yesterday it spiked to about 925. So actually it traded around 895 to 907 before now falling sharply to 925. However, by this morning it had already regained just by a little margin to about 907 to 902. So the main dynamics, like I already mentioned, just low forex supply at the official window, pushing demand towards the parallel market. So, we had already had this conversation, I think, not long after the convergence of the exchange rates, exchange unification process. And the major concerns that I raised at the time was that there are still lingering concerns around Nigeria's forex supply. And this is because of our major sources of forex into the country. We've not really seen a significant uptick in those sources. And these include, non-oil exports revenue, all exports revenue, that's from crude oil, remittance inflows, foreign portfolio investments, and FDIs. The initial reaction that we got from hot money, which is basically FPIs, we're beginning to see that, slow down. And most of the FPI inflows went into stocks and bonds, and we haven't seen, the same momentum in terms of an increase in forex supply from the other sources. Crude oil revenue, it's still not, optimal. Even though we've seen like gradual increases in crude oil production is still averaging about 1.2 million barrels per day, same as last year. So really nothing has changed in terms of the amount of money that, the government is earning in hard currency that will significantly nudge intervention and forex supply efforts at the official window. In fact, we've seen external reserves bleed so much this year, and we haven't seen that same momentum in terms of an increase. And again, it's still stemming from the reduction in terms of forex supply from our official sources.
Yeah, we have we're having so many seminars and talks on non-oil export, and then we are seeing activities with dealing with oil theft. I just wonder how long it will take before these will materialize into more FX into the country, because supply is the solution that we need here.
Yes, you're very right. You're not wrong about the seminars. It's everywhere. Everyone is talking about it. We've been talking about it for a very long time, essentially just trying to diversify the country's, revenue base. It will definitely take some time, simply because these are structural reforms, right? And there's always that lag effect between when the structural reforms actually take place and when they begin to take full effect on the economy, and we can begin to reap the benefits of the reforms. It will take some time, but there are definitely steps the government can take to ensure that they are actually pushing efforts pushing efforts and intensifying efforts in the right parts of the economy that have positive multiplier effects on economic growth and inflation and even GDP growth, right? So the basic thing is we already have established over time that Nigerian government is not earning enough to substantially bridge our infrastructural deficit, provide the necessary infrastructure, even for like health and education infrastructure that then now have positive multiplier effects on like labor productivity and even demand, and then even looking at boosting productivity from the agricultural manufacturer and even trade sectors, essentially the real sectors of the economy, right? So what we need is an inflow of forex into the country. And where will it come from? Definitely foreign foreign investments, right? And we want to make sure that we're attracting the right kinds of investments. So while we know that all of these reforms, the immediate reaction, short-term reaction to it will be an inflow of FPIs, we want to ensure that we're attracting more long-lasting investments, which are FDIs, right? And because these FDI investments, they can't just up and leave whenever things get a bit tough, right? Unlike FPIs. And what does this mean? It simply means that the government needs to commit to, first of all, we've already started, right, in terms of taking up the necessary reforms, liberalizing the exchange rate, or the forex markets rather, and taking off fuel subsidies. But the government has to do the follow-up work here in terms of ensuring that these reform momentums don't die. And one thing that will definitely nudge the right kinds of investments is taking a very close look and reviewing the forex importation restrictions that still linger, right? Simply because this is a huge disincentive to the right kinds of investment that we need. The problem for Nigeria today is that we're not productive enough, we're not producing enough to even satisfy domestic demand before now even thinking of exporting. And what we need is the right kinds of businesses that will do this for us, not just producing raw materials, but boosting value addition, right? And this involves the entire supply chain from agriculture down to manufacturing. And we want to make sure, like I said, that we're attracting the right kinds of businesses. We have special economic zones. We've started on the right path by, trying to take up these structural reforms, but we have to go further down to avoid the negative impacts of certain reforms like this, just like what happened with Asia in 1997 that I think I had already discussed with you sometime, I think some time ago. So these are some of the steps that the government can take. We just need to continue on this structural reform momentum that we've already started to attract the right kinds of investments. One way to do that would be to even make sure that our special economic zones are working at the right pace and working with the right incentives. The incentives are there, but there's clearly still a lot of bottlenecks and hurdles for businesses to even cross before things like bureaucracy, things like getting their goods out of the export zones or even bringing in their raw materials. So, and these are problems that shouldn't even be existing for companies within the special economic zones.
Yes, you said, I think you just got the word out of my mouth, because we had a conversation with someone who is involved in these economic zones, and he just gave a hint as to the requirement, how much you pay for you to operate there. And, it's just very discouraging. And in spite of that, you do not have all the infrastructural requirement that you need to run your business easily. But, I mean, before we get carried away by that, I was just imagining how much Nigeria would have been making at this time. Brent is close to $90, it's 87, 86 this morning.
Yes, you're very right. We're seeing that huge, momentum from crude oil prices simply because of supply concerns. We're seeing that OPEC is still being very conservative with its oil supply, and the markets are also shrugging off, China's deflation concerns as well. So what is happening with China is that China's inflation has been declining very rapidly, and that in itself is not a very good thing, simply because consistent disinflation simply means that people have money to spend but are not willing to spend simply because they expect that prices will continue to fall. And what this means is a contraction in business activity simply because it affects businesses. So it's a situation of prices rising too fast, which is inflation, that now causes, that contracts demand. And then while deflation situation where you have prices falling too quickly, that now affects businesses and then it affects output. So for a country like China that is, heavily dependent on an increase in output from businesses, which also comes from an increase in demand. That's why we're seeing this level of concern on deflation for China. Some analysts are even alluding it to something like what Japan experienced for over 15 years, over a decade. But it's not as bad, simply because core inflation for China still increased, and monthly inflation for China as well increased. So the deflation concerns are not as high, but it's still something that the Chinese government is planning to tackle. As of today, they're already targeting an inflation of 3%, which is very close to the global inflation target that countries should have over time. So inflation should not be too low, and neither should it be too high. So there just has to be that balance.
Maybe it's a funny world. Inflation is a problem, deflation is a problem. I don't know. Well, just tell us what else is happening in the commodity space, especially back home here.
Yeah, we're seeing something. We're really seeing a lot of things happening in the energy space. LNG prices globally are increasing, simply because marketers globally are somewhat. So I wouldn't say hoarding, but they're just planning to take advantage of the higher prices that would come due to the forecast of a cold weather. They're expecting winter to be a lot more cold than what it was as of last year, or even at the beginning of the year, and marketers are planning to take advantage of higher prices. And so for that reason, we're seeing global LNG prices increase. And now what this means for Nigeria is that cooking gas prices are also going to increase. The Nigerian Association of Liquefied Natural Gas have already come out to make a statement that cooking gas prices would start increasing from next week. I remember that as of last week, a 5 kg cylinder was going for about 3,600, while a 12 kg cylinder was going for about 6,000. But now we'll definitely see these prices increase again to what it was around last year, where we saw a 12 kg cylinder going for as high as 10,000 naira, going for as high as 10,000 naira. And although the increase in global LNG prices are not the only things that are factored into this price increase forecast, the Naira devaluation is a very huge deal here, and the fact that companies that are bringing in they're importing LNG into the country, or importing LPG into the country, are still experiencing forex scarcity, pushing them towards the higher black market rate. So these factors definitely are feeding into cooking gas prices as of today, or will filter into it for next week and the weeks ahead.
Oh, I know some people watching now would already say, oh, it's time to increase the prices. Why wait till next week? But thank you so much, Dumebi Oluwole, Senior Analyst with Financial Derivatives Company.
Thank you.
All right, now let's take a breather. We'll be back for the markets.